Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Drew Pearson. Thanks for being on the show, Drew.
Hey, thanks so much.
Yeah, a little about Drew. He began his commercial real estate career at Ladder & Blum in Baton Rouge in 2008. Moved to a boutique firm named Waters and Petit. Is that how you say that, Drew?
Pettit, but that's real close.
Pettit. Waters and Pettit in 2011, and within a few years became a top-selling agent there. To date, he has sold over $100 million of investment property in more than 15 states. In 2015, he began to work at a real estate private equity firm, Promanus. Is that how you say that?
Promanus.
Promanus. I'm messing everything up today. My goodness. In Ann Arbor, Michigan, where he served as head of acquisitions, helping the firm to grow to over $250 million of real estate assets value. He considers his time there instrumental in his growth and development process. So, Drew, thank you again for your expertise and being willing to share today. But give the listeners a little more about who you are and what you're up to right now.
Well, man, look, thanks so much for having me on the show. I'm born and raised in Louisiana, and I've always been passionate about real estate. And, like we talked about, I got started as a broker, and, it's a tough job being a broker, waking up one day, having someone change their mind, and you're like, wow, I still got to pay the house note this month. And there it went. And so for a couple of years, I'm thinking, so how do I grow my wealth in real estate? How do I add value, more importantly, to other people's lives? And it's just been a natural transition to get to this private equity world of real estate, whatever you want to call it, where right now, we raise capital to buy income-producing properties. We manage those properties and then send the return back to our investors on a monthly basis. And so we're trying to create mailbox money for our investors, in essence. But we just closed on our fifth deal. We've got about 12 or 15 million under management right now across 2 different states. And so we're scaling our property management. We're scaling our fundraising. And I wanted to come on the show today just to talk about some of the challenges, to be encouraging to folks in my position. It's a big leap going conceptually from, hey, I know about real estate, I've done deals, to raising money and then, using that to feed my family. So that's one of the biggest reasons I wanted to come on the show today.
I love how you laid that out there. I mean, from getting started to using it to feed our family. I mean, that is a big step. And I mean, and just getting to a couple deals, I mean, that's getting started. I just see it time and time again is so difficult, right? I mean, I learned it myself and seen it, through my own business. And then I see it in so many people all the time. It's just getting started, especially the first deal.
Right.
But, I'd love to hear, getting your business off the ground, getting started, or maybe you can help the, others that haven't had got to the first deal yet. But, maybe we can back up a little bit and lay out a little bit of the challenges that you had to work through and help us do the same.
Well, I think the biggest challenge is really the mental challenge of just knowing that, listen, you can do this. Depending on your level of background, I think the safest way to invest in real estate is to try to find value add properties that are below replacement costs, where the tenants are paying at or below market rent. Can we reinvest some capital into the property to raise those rents and raise that value? And so we were fortunate enough to find a property similar to that, located right next to a hospital, leased to doctors and urgent cares. So that's been a great property for us. And then at the same time, we found another kind of corporately leased property to a Fortune 500 company with 2,000 locations around the country. And so we have a blend of kind of steady Eddie money that shows up, automatically direct deposit. And then we also have this other property where we kind of roll our sleeves up a little bit, add value to it, and continue to increase the cash flow and its value long term.
Okay. So you mentioned, like value add usually is the safest place for people to start. And, I know like right now, value add properties are hard to find.
They are. They're a challenge. Yeah, I guess I got started back in '06, '07 working for a developer, and things were tough for him in '08 as they were for a lot of people. And so I am still a little more of the conservative mindset, seeing how it can go real bad. I know a lot of people have done well in development, but that's kind of why I tend to stay closer to the value add type properties.
Yeah. We talked about, or on the show, about how, a lot of people are moving to development because of the difficulty in finding properties, but I'm not so sure that's a place where I would start.
Yeah, I can agree. I think you need a strong balance sheet. It's helpful to have seen a cycle or two, in my opinion.
Yeah. So, you talked about some other, or there's just challenges getting your business off the ground, getting started. What are some other challenges? I know, getting to that first deal.
Right. I think one of the biggest things for your first deal is it's the chicken or the egg. We have to have the capital and the deal, do the due diligence, and then close simultaneously. So one thing that I would improve upon next time is kind of soft raise that money to begin with. Go to your friends and family and say, hey, listen, guys, this is what I'm looking to do. Kind of give a hypothetical property, hypothetical price range and return, and say, if I find something like this, would you be interested in investing in a deal like this? And if they trust you, odds are they're going to say yes. And so you've kind of got this capital soft committed, talk to a banker and kind of get some money, some hypothetical terms lined up, and they have your global cash flow statement and all this kind of stuff. But it can be very stressful when you get down to, 10 days left of your inspection, you're raising capital, you're going through an operating document, you're doing all this, you're kind of running around with your hair on fire. And so my suggestion is to kind of take it into pieces where you're prepared going into that first and your second deal.
I love that, running around with your hair on fire. That is so true.
Right.
That is so true. But it is a big issue that I hear talked about also. Like, is it the deal you need first, or is it the capital? Or everybody says, well, if you have a good deal, the money's going to come.
Well, and again, I think that's true. Boy, a track record is just so helpful. And as we're kind of getting our fourth and fifth deal underneath our belts and we're distributing capital on a monthly basis, I just can't tell you how much easier it is to have conversations with investors. They're referring us to their friends. And so in my opinion, it's a simultaneous deal that you need to properly plan for.
No doubt. So, yeah. And I like your point that you said about having a hypothetical deal and going out and talking to people, and you do have to have some kind of input or interest in people investing with you, right? Or, starting after when you start due diligence on a property, that's not the time you want to start raising capital. Right?
It's ill-advised, I'll say that.
So, if you're talking to somebody and they're saying, okay, Drew, I've talked to my friends and family and I feel like, I've got, let's say $500,000 committed. How much of that would you say we should count on when we actually have a deal?
Well, I would say it's all kind of depends on who your friends and family are, who your father-in-law is. But I would feel good about 400,000 of that. I guess I've learned a few things of when you're targeting money. I'm in my 30s, and so I have some friends who are fortunate enough to have done pretty well. But you're really targeting investors who are 50 and older. They have a lower risk profile. They have a lower return metric. Wealthy folks in their 30s and early 40s are still looking to, in my experience, are aggressive and looking to really grow their net worth, which can be challenging on the return side for real estate. It's challenging to get them interested. So I would focus on some higher net worth, older folks who are conservative. And then I would just really clearly lay out the first question everybody has is, okay, as the investor, what am I going to get paid? What am I going to get paid and when am I going to get paid back? So you need to answer those two questions. And then the next question is, okay, Drew, what are you going to get paid in all this? They want to make sure that it's reasonable, it's fair, that you're not kind of dipping in the kitty before you should. So you answer those two questions first, and then go into the property specifics. What's your path to growth? Why you think there's an opportunity here? And I thought it was a much harder conversation than it is, but it's really a 15-minute conversation. And then you need to ask. Make sure you ask for the right amount. And just ask and say what you need. Hey, I need $250,000. I need $1 million. And you'd be shocked at what the world will deliver to you.
Okay, so here's the simple truth. If you don't have private investors waiting on the sidelines right now, you're going to have a hard time closing your next syndication. Are you afraid to talk to investors? Do you feel you have a lack of credibility? or no one will take you seriously? Or what about your systems? Do you have anything set up yet? Well, if you know you can improve on getting in front of and influencing passive investors, then you should call my friend Adam Adams. Adam has a proven system for you to flip the script. Now, this is a 5-figure investment for you to take your business to the next level. I want to see you succeed, so I placed a link in the show notes for you to apply to work with the Adam Adams. And if you think you qualify and you know you're going to take action on what he teaches you, then scroll down, find the link, and take your money-raising abilities to the next level. Would you elaborate a little on maybe how you raised the capital for your first deal?
Sure. I was fortunate enough in my 10 years as a broker to form some good relationships with some other property owners in my area. Some guys with 30 and 40 properties already. And it was like, hey, Drew, we like you. We trust you. I've kind of gained their respect and credibility. So that was probably 3 of my investors, which accounted for 50, 60% of it. I also have a partner who I work with, Ben Bullock, and he had a family member come in for a little bit. It was easier than I thought it was going to be. I mean, I'm not lying to you. It was 24 hours. We raised $1 million on the phone, just like that.
Good for you. And
Yeah.
Would you agree, though, that was all because of the previous relationships and how you had built those long before you needed capital?
Absolutely. If I didn't have the background in real estate, it would be much more challenging, Yeah. And, I also didn't ask my family members directly. I didn't ask my dad and my parents or anything. Just, look, everybody's situation is different, but just making sure to kind of keep church and state separate, I think is good for Thanksgiving meals,
So, then growing your business or going from, the first deal to the second deal, any other challenges there that maybe you didn't expect or you didn't have on the first time?
Well, I think it's so important to understand your strengths and your weaknesses. Oftentimes guys who get off the ground are deal junkies. They're deal guys, and that's what I am. Unfortunately, some of the minute details of like CAM reconciliations are not my strong suit. And so making sure that you're planning for future hires. We're trying to build out our property management team right now. And there are just some inevitable challenges that come with that. But as long as you have a good plan in place, a plan to grow, I think that's what's important. The deal with real estate is you kind of have to have a certain assets under management to pay for some of these positions. And so until you have that income coming in, it's kind of up to you and maybe a partner to take care of all those roles.
So planning for future hires. Now, I think it's very smart. How else are you planning, or let's say, after the first deal, or maybe into the second, or other things that you maybe should have been planning for that you weren't at that time? Again, there's so much stuff that you don't know until you get into it, but we've really grown our knowledge on the non-recourse debt side of things. And so we've got a great mortgage broker based out of Mobile who we use, who's young and aggressive, and who gets us kind of some great quotes. It's just proper preparation. It can be applied to really every metric in real estate, from lining up your local lending to your inspection material, inspections on your properties, all that. How did you all educate yourself about, non-recourse loans, or, to become so knowledgeable about them?
It was just the most random thing. I talked to a professor at LSU who was head of finance and was a mortgage broker in a past life. And he had kind of referred me to someone who referred me to this guy. And he's been phenomenal. He's a guy about my age who we can kind of grow our career with. And I think it's important just to try to align yourself with smart and people of high moral character who are hungry. The guys who are hungry and the guys who are just kicking back with their feet up most of the day.
I like that. And there are times where you need to be in the business already 30 years, but then again, there's times where it's beneficial to have somebody that's not as experienced, but somebody that's still hungry, like you're talking about.
Exactly. Look, he has 8-9 years experience on the banking side. And so he's like us. He just made the leap to really eat what you kill last year. And so it's been a great relationship.
I like that. And so, Drew, what's been the hardest part of this syndication journey for you?
Man, I think patience is such a hard thing. You have these big goals in front of you. You have some internal investment metrics that look really great in Excel, that look really great on paper. and then finding those deals and being patient enough to say, hey, listen, if we follow our process, which is prospecting every day, which is communicating and doing deals the right way, knowing that it's going to come, and knowing that this is a get rich quick and 30-year strategy, and so if we do our jobs right, it's going to all work itself out in the end. But those first, even 1 and 2 years, you're ready to get there. You're ready to push and be aggressive, which is not always the best thing to do when it comes to capital allocation.
Yeah, especially when you're brand new.
Right.
So, how are you preparing for this potential downturn that everyone's talking about?
I guess that is the $1 million question, and I'm certainly not smart enough to know, is it going to happen tomorrow or in 10 years or something with Iran or who knows what. Again, we kind of come back to core principles of real estate, which in our opinion is buying properties below replacement costs, lease to tenants who are at or below market rent, and lease to companies who are Amazon and internet resistant. We lease to people like Exxon who have a pipe yard, or a doctor who gives pain back medication for their patients. These are things that just can't be outsourced to the internet. And again, we looked at making sure that we're not paying above market rents. I think Starbucks is a phenomenal company, but if they ever leave a location, it's hard to replace $45 a square foot in rent. And so just making sure our downside is protected where we can weather the storms to come.
So you're doing numerous classes, or what are you? Your all's focus?
I'm sorry, what'd you say?
Are you all focusing on numerous asset classes? Do you all have some retail and also multifamily, or?
Right now we own industrial and multi-tenant medical. Multifamily is not my bailiwick. I'm gonna leave it to people like yourselves who are much more skilled at it on the management side. We're not really into retail because, again, I think there's a lot of question marks there. I have some friends who are doing very well on large scale, second and third generation developments, but again, that's not our bailiwick. In the Southeast, industrial is really big, and I think medical office has a long way to run.
So what's a way that you've recently improved your business that we could apply to ours?
Man, that's a great question. We have started implementing and using Traction. It's a system and book written by, it's on my desk right here. As a matter of fact, it's written by Gino Wickman. And it's a great system on keeping your team members accountable and yourself accountable, weekly meetings to really set goals and reach those goals. We just started implementing that a few months ago, and it's really been great for us.
Are you all doing the EOS portion of that as well?
We're not. We're kind of doing the EOS on our own right now with the hope to get there in the next 12 months, have an implementer come in and do the whole deal.
Nice.
Again, it's all about kind of managing that cash flow early on.
Yeah. So what's one way that you've seen, Traction and the things in that book, help you all the most?
Well, I think it's great to write your goals down and look at those goals every day. Look at, they call them rocks, which are your kind of quarterly goals, and then your issues, and working through those issues. I'm always shocked on how you have these nagging things in your mind at 4 a.m. You go through your day and nothing's ever, completed on those issues, but you have this issues list, you work through them in 5 days. You're like, oh shit, wow, I've got all my issues solved for the quarter. So it really holds your feet to the fire to keep you accountable.
It's time to come up with some more rocks then, right?
That's right. I think we're going to hit our goal here into January for the quarter. So it's time to get some more properties under contract.
So what's the best advice you can give for caring for investors in a way that they want to come back to the next deal?
I think what I have found is just to be open. It sounds cliche, but just be open and honest with people. Be as transparent as possible. And then I really think humility goes a long way. I'm certainly honored for the money that we have had the opportunity to deploy, and knowing that $250,000 is a lot of money. I know we can kind of get distracted by stuff in the media or numbers or whatnot, but that's still a lot of money to families and to people. And the fact that we have that opportunity, I'm just humbled every day, and it's a responsibility to treat it right.
What's the number one thing that's contributed to your success?
That's a good question. I'm fortunate to have a great partner Ben Bullock, who I'm with every day, and we push each other to think bigger, to be accountable, and to do our jobs to the best that we can do. And, the good Lord's just put a lot of opportunities in front of us to be successful. And so I'm thankful for all those things.
How do you like to give back?
It's something that we're really working to do. I don't know yet is the answer. I know that's part of my life that's a little weak, and that's one of our goals this year, is to contribute a portion of our profits to something that's worthy, whether that's St. Jude or whether that's wounded veterans, something like that.
Wow. Appreciate your transparency and that y'all are thinking about giving back. And but tell the listeners how they can get in touch with you.
Yeah, really simple. My email is drew@pearsonpartnerspe.com. PearsonPartnerspe.com. If you got any questions or just want to kind of catch up, I'd be glad to offer any advice or help I can.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.